Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Yesterday's rupee move was quite the opposite of Friday's move. USD/INR opened below the all-time high and traded stickily around the 83.35 region before closing at 83.28. Ahead of key data from the US like the GDP and inflation prints, let's try to find out how it can play out for the dollar. Morning, JK. How do you read yesterday's moves? Would you consider the pair back in a range, or there is still some gunpowder left for a blast?
Good morning. We have seen the rupee stabilize yesterday, and that was what we indicated also in the morning update yesterday, following the big volatility that we saw previous week. Rupee did open well below the all-time lows, which it had broken after onshore trading hours on Friday. And also traded with a positive bias as exporters were seen hedging more with the financial year end in prospect. And reportedly, there were also offers from PSU banks that we heard. Main driver of rupee volatility, the Chinese Yuan last week. This last two trading days, it has recovered after the Chinese daily fixing of dollar was much lower, showing their disinclination to let the currency fall steeply. Even so, it has been weaker than what was seen in the recent weeks, and that has kept most of the Asians also relatively softer. Now, with the financial year end upon us ending tomorrow, I see some residual selling pressure on dollars today and tomorrow. But going forward, we could see some upward pressure on the dollar as dollar index looks firm. So long as dollar yen trades near its multi-decade high and has potential to break into new highs, I do not see a relief for yuan or other Asians, including INR. So until we see some strong action from the Japanese authorities, which brings down the dollar yen, and then the competitive devaluation pressure reduces on the Chinese, until then, I think we will see dollar somewhat on the bid side. We did have some macro data from India that the current account narrowing down to 10.5 billion or 1.2% of GDP in October, December. That's the last quarter of calendar year 24. And the previous quarter had recorded 11.4. In the previous year, for the same quarter, had been at 16.8% or 2%. The big improvement in the current account, as we have been sharing, the merchandise trade deficit has been narrowing down. It had gone to 71.6 billion in Q3 FY24, from 64.5 in the previous quarter. But we are in the last 3 months, we have been seeing a very good, fall below 20 billion on an average, and the net trade deficit, including services and merchandise, has been, very negligible at 2 billion per month. Current account more likely to be closer to 1%, and with all the, capital flows and the private receipts, BOP is a very comfortable surplus for India, at least as far as FY24 is concerned. So rupee exchange rate based on domestic macros is not under any stress, but any influence from the global factors cannot be ignored. As far as the global markets are concerned, there weren't too many data points, except that the durable goods order showed that US manufacturing is actually on the improving side now. This is coming mainly because manufacturers feel that interest rates are headed down in the coming months. So the increasing orders for durable goods, that was seen at 1.4% rise last month versus 6.9% fall the previous month. This number is quite a volatile number, so not too much to derive from it also. Overall, if you look at the manufacturing indicators in the last few days, seems some improvement, definitely. We also had the consumer sentiment data, rather the consumer confidence number in the US fell for the third month in a row, 104.7. And the present situation index, however, increased, in March from February whereas the expectation index was slightly down at 73.8 from 76.3. You know, just to keep you informed, the expectation index reading below 80 often signals forthcoming recession. On the markets, the stocks were softer again for the second day running, mainly due to profit taking ahead of a long weekend. Friday, we will see the PCE inflation data, but traders will be absent. In fact, even on Thursday, it's likely to be a very shortened session as far as the traders are concerned. It's not an officially shortened session, but don't see much participation. So GDP data on Thursday and the PCE number on Friday will have full reaction only as we open trading on Monday. So safe haven buying of bonds kept the yields also somewhat subdued. Quartering demand as well as other central banks being more certain of cutting rates in June versus the Fed is keeping the dollar bid, of course. We are also watching, as I said earlier, the dollar-yen rate, which trades closer to multi-decade high, with the break of 152 paving way for another 1 to 2% move, dragging the broad dollar higher. But if we do see a break of 152 and starts going higher, I see market becoming more unstable and traders being nervous of intervention. But most big guys are actually not worried as of now, and they would act on buying yen only if they see an actual intervention from the Japanese authorities. So all said, I think we are into the next 2 trading days of the financial year on a slightly subdued note, waiting for key data and more indications on how the monetary policy is going to play out in the coming months. Thank you.
Thank you, JK. And just picking one point which you had mentioned, which is the competitive devaluation game which is going on between Japan and China. Basically, if the Japanese yen, which is already trading at multi-month lows, if it breaks out, then possibly we might see some more weakness in the Chinese yuan. So that's a story that we'll keep on following. We saw some stability in the rupee yesterday, traded with a slight positive bias, and as JK mentioned, there were offers from PSU banks as well. And the main driver for rupee volatility is Chinese yuan, which has stabilized after efforts of PBOC to curb depreciation. But in the overall context of the competitive devaluation, how it will play out, I think we'll keep following that story. From the US, we'll have data from on the GDP on Thursday and PCE data on Friday. Considering it's a truncated week, the reactions will come in on Monday. So we'll keep following that. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial market.